Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup, and as well as all the trading strategies and the fundamental strategies that you should be looking at adopting in the new week of trade again. Remember, the Nifty 50 index, after breaking a 6-week of losing streak, is now heading into this new week after the long weekend on the back of a slew of announcements over the weekend that have actually taken place in the last 3 days. Now, first of all, it was the ratings upgrade that, of course, we got to see, on Thursday itself, which may have come during the market hours on Thursday, but other global uncertainties actually kept the lid on market reaction. So today will be a proper day when we will see a reaction of that upgrade coming in. Of course, with no clarity yet on what happens to Russia, Ukraine with the US. Uncertainty persists over whether an additional 25% tariff on India will actually come into effect on August 27 is another overhang right now. Remember, Donald Trump and Vladimir Putin, the talks that were held have ended with a no deal yet, and they have signaled that there will be more talks ahead. So that will be another factor that will be looked at. The major announcement that came in from back home on Independence Day was from Prime Minister Narendra Modi on his Independence Day address that he made, especially promising generational GST reforms before Diwali that could keep most GST-linked stocks from autos to FMCG in focus today, and that will see a key reaction on the markets as well. Three GOM meeting, is going to be taking place between August 20th and 21st to discuss the GST rationalization, and that is something that we will be looking at. What has happened as far as the Wall Street action and the Asia markets action is concerned to get us a cue from there. So we have seen on Friday night, Wall Street ended lower. Investors were seen booking profits after the strong week. S&P 500 index fell by 0.3%. Dow Jones settled almost flat with the positive bias there. Asian markets this morning were seen trading mixed. We've seen Japan's Nikkei index was up by about 0.4%. South Korea's Kospi index was down by 0.8% as well. We also looked at China, again 0.8% higher, whereas Hang Seng was just mild with a negative bias there. Kospi also down by about 1.5% now. Let's look at the gift Nifty. That's implying an opening on the Nifty above 24,980 odd points, 1.3% higher. So strong opening on the back of that bullish GST reform, being seen again. That's something that we will be looking at as well. Let's now welcome our guest on board. We have Mr. Dharmesh Khan joining in on this special program from Chola Investments. Warm welcome to you, sir. Thank you so much for taking the time out for this special conversation. We have to ask you about all the parameters that have occurred over the weekend. But let's start off with the overall mood on the markets then. We've had 6 weeks of losses. The truncated week did see some bounce taking place. And now when we start off another week, this is basically coming in on the back of positive news from the domestic side and yet the uncertainty that looms large on the tariff side as well. How would you look at the markets for this fresh and new week, sir?
Yeah, very good morning to you, Sakshi, and to all our viewers. So last week we did see market, trying to get hold of on the downside and have some cherry picking or nibbling into the market. And the cues were there. I mean, people were expecting some policy announcement on the Independence Day, which did come through. And the outcome of Mr. Putin and Mr. Trump meeting, which was again a non-event. So putting, I mean, things into place, first was the S&P upgrade of India sovereign upgrade was there. Market did not react on that. I think that reaction is coming today. Second was the non-event of President Putin and President Trump meeting. But Mr. Trump did hint that he may not go ahead with the additional tariff because it would be a hard impact on India and the Russia. So that has to be seen what happens out there. The uncertainty prevails there. The only problem today we may see a knee-jerk reaction actually on the market, but the only problem is with this kind of a GST reform being slated to be functional from maybe same September to November. Keeps the uncertainty in place. I mean, people who are planning to go for purchases in the festive season and all, they will have, double thought that because of a say 10% kind of a reduction on the small four-wheeler or two-wheeler kind of a thing. So it's a good amount of money involved out there. So that may slow down the upcoming sales which was expected in the automobile industry, and it accounts for say 14-15% of the total GST being collected. It's a good share out there. At the same time, the various other parameters, I mean, corporates who are planning capacity expansion and all, and planning their business activity for the year may still be put on hold for say 3-4 months. So it actually, to my mind, it pushes the recovery, 3 months more forward. So the idea should have been either you announce it or you keep in abeyance till the actual announcement happens so that the natural course of the business activity can go ahead. Having said that, it's a structural reform and definitely a consumption booster in the long term. So fundamentally, from long-term perspective, it's a good catalyst for consumption to take place. This is coming on the backdrop of one taxation reform which has already taken place, where the tax rates were cut for individuals, and now you have a falling interest rate cycle and a low inflation in place. So all this should, assemble and lead to a pent-up demand maybe in the month of November and December. But by that time, it will be more of a hope trade until fine print is there. So I would not be a buyer in this market post, a good opening which we are seeing. We will wait and see how the things pan out. And to my mind, this will still be a range-bound kind of a market where, trading activities and some cherry picking will see. Downside is definitely protected because you have a margin of safety on account of a bond to equity yield kind of a risk premium, which is at almost a 10-year low at 1.24%. So that does provide a high margin of safety in cushion. So maybe 24,200, 300 is the lower end of the range in the worst case scenario, and upside can be limited to 25,200, 300. So this 1,000 point one has to live with for next 2-3 months. That is my reading of the market presently.
Okay, so don't just jump in and buy into the bounce that we are seeing into the markets. The trade could be still range bound for some time to come. That's the statement coming in from Mr. Khan. The other important bit that I would want to draw your attention, of course, we will dive a little deeper into the GST bit and, of course, on the tariff bit as well. But the other important bit that kick-started India or the Nifty to be on the recovery path is the sovereign rating upgrade that we actually got on Thursday from S&P. This is after nearly 18 years that an international ratings agency, S&P, has upgraded India's sovereign rating from BBB negative to BBB. This historic step has definitely increased the confidence in India's economic stability, future prospects as well. How would you really look at this upgrade at this point in time? Do you expect other ratings agencies to also follow suit? And for India and the Indian economy per se, how do you see the impact that could this lead to? Will there be a lower interest drone that we can actually hope to get? Will there be increased foreign investment that we can hope to now get as well? And continued capex. Those are the 3 points that I wanted to discuss. Before you answer that, just marking for our viewers the first tick on the pre-open trade, 25,161, a 528 point of a jump, over 2% of an uptick, much higher than what the GIFT Nifty was indicating. So the implied open right now till the market settle in pre-open is that we are going to be seeing an upward start of even beyond 25,100 odd mark. Keep that into focus. This might come down a little bit over the next 5-7 minutes. But yes, go on, Mr. Kant, as far as the sovereign rating is concerned.
Yeah, I mean, it's not only very interesting but perplexing at the same time, given when it is coming, this scenario. So, at one point of time, when you are having a doubt on the structural growth story of India because of the tariff policies which have been, I mean, right now framework by US government. So, if that falls into place, the entire China plus one story and make in India and India being option to US and the other world for China manufacturing comes into a big question mark, because 50% or even 25% kind of a tariff rate is not sustainable, because most of the companies which are manufacturing and supplying to US, be it textile or automobiles or auto ancillary chemicals, they all are 20 or sub 20% kind of a margin play, and the absorption of the same on the US counterpart is hard to take into account. It's difficult for them that the entire impact will be taken into by them. So at this time when, I mean, this has been questioned and you are having a sovereign rating upgrade. So it's very interesting to see. I mean, if you are reading between the lines, it does point out that there would definitely be some negotiations up the sleeve in favor of India, and if that falls into place, it will lead to a structural, growth story again. So as of now, FIIs have been, shying away from India. They are pulling money, they are booking profits and getting out the investments from here. This definitely lowers the cost of India. So optically, it will again boost up the profitability of most of the companies as far as the cost of funds are concerned. And that again, as we just spoke about bond yield to equity yield kind of a premium, it will get further narrowed, and that will give a further a boost to the entire valuation kind of a structure of India. So very positive for the country. And my sense, I read this as कि maybe this tariff will sit in favor of India in the range of 15 to 20% finally. It may take, I mean, as of now, it's not being implemented. It's just the announcements being there and dates being pushed forward. So if that's the scenario, then eventually things will turn in favor of the country. So everything is falling into place. It's just taking a time. Maybe 2 months, 3 months kind of a time frame may still be there. And eventually things should start get going. So this is how the macros are being placed. The only worry is actually is on the micro front, where still you are not seeing, in spite of lower inflation, tax benefits passing on to individuals, the consumption has not picked up the way it should have been in the country. So our feelers, our channel checks on the ground checks do suggest that it's still business as usual, and no, euphoria or excitement is seen on the consumption front. So that we have to see when it picks up. So net, I mean, it's a very balanced kind of a situation. It's very difficult to uh, give you a trending, either upside or downside to the market based on the present situation. So unless some green shoots are seen, we have to wait and watch the entire economic spectrum.
Okay, got that. Let me just now shift focus to GST and do a deep dive yet again for all the viewers who are just joining in. The big talking point after Prime Minister Narendra Modi's big statement on GST came in on the Independence Day. We have seen this smart uptick on the markets in the pre-open trade that now indicates and opening above 24,900. The first tick was even higher than 25,000. This is buoyed by the good news that Prime Minister has said that coming Diwali, we could be seeing big GST rationalization that could lead to, a lot of household items turning cheaper. Let's first listen in to what Prime Minister had to really say, and then we'll do a deep dive discussion on the same.
हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे। सामान्य मानवीय की जरूरतों के टैक्स भारी मात्रा में कम कर दिए जाएंगे। बहुत बड़ी सुविधा बढ़ेगी। हमारे एमएसएमई, हमारे लघु उद्यमी, इनको बहुत बड़ा लाभ मिलेगा। रोजमर्रा की चीजें बहुत सस्ती हो जाएगी और उससे इकोनॉमी को भी एक नया बल मिलने वाला है।
All right, so that was the powerful statement from Prime Minister coming in on the Independence Day. Let me now also bring in into the conversation my colleague Karishma Sudani, who's been tracking the GST news for all of us all this while now, and more action will be seen in the coming days. Karishma, good morning. Tell me, what after Prime Minister made those statements are we hearing now? What could be the next course of action? When is the Council going to be meeting? When do we expect, any kind of rationalization to take place? And what is truly expected now? Do you think there could be change in the slabs? Could there be a sharp reduction? Can there be more things shifted to the lowest band, that is 5% or even lower than that as well? What do we expect? Help us with all of those details.
Sakshi, GST 2.2 reform has been something that has been quite on the table for some time. And we've been reporting at Business Today for quite some time now that government has been very unhappy with the feedback and reviews that they've received from the industry and consumers on the 12% slab. So they've decided that on the basis of the consensus of the council, they're going to introduce and reform GST to two major slabs, which is going to be 5% and 18%. So a three slab four slab structure, which also included the sin goods, will now not be into being. And in 2 months from now, after the consensus from council comes in, there will be a slab GST structure with the primary essential goods as a part of 5% and secondary goods as a part of 18%. There will be a 40% special rate structure, which the government, the center proposes not to be counted as a third slab, but just a special rate for few sin goods, which currently are taxed about close to 28%, but along with cess, they almost come to about close to 40%. So the 40% tax on sin goods on few luxury items could still continue to be in place. Compensation cess, which is about to end in March 2026, government plans to subsume it and end it in November this year. They would like to do it with the GST 2.0 of 5 and 18%. Now, the good news is, Sakshi, here that most of the 12% items will actually move to 5%. So basic items like ghee or butter, which people pay 12% GST on, will now only pay 5%. The 5% items will continue to remain in 5%. The 28% items will likely see a switch to move to 18%. For example, automobiles. The big gainer here has to be cement and automobiles, because currently there's a 28% GST on cement, 28% on automobiles, especially on the compact SUVs and certain automobile parts. This will see a 10% slash in the cut, which will be very, very beneficial for the industry and for the end consumer also. The challenge, which I think was also being discussed before I joined this chat, was on consumption. But government says that this could be a metric to actually pull up consumption, and they're confident of the fact that they'll be able to fill in the revenue loss via the consumption and the increase in spending, the consumer spending that that India will see. They're also comfortable on their revenue position on this. And while economists depict a close to 0.2 to 0.4% impact on the GDP, government says they'll be able to overcome that via increased consumption and capex.
Thanks a lot, Karishma, for all that update. Of course, this is a space to watch out for over the next couple of days, and I'm sure a lot of developments will take place, and we'll keep tracking all of that with you. Going back to our conversation with Dharmeshji, and let's also welcome Vaishali Parekh, Head of Research for Technicals at Prabhudas Leeladhar as well, joining in on the panel discussion. So that's the talking point. What will the GST cut benefit? I mean, will it be certain sectors? Karishma highlighted autos could be big beneficiaries, cement could be seen as a big beneficiary, FMCG products, you know, the fast moving consumer goods could also see, and that's getting reflected in the pre-open trade as well. Right now it's settled at 24,938. You can see autos, consumer durables and FMCG. These are the three top sectors that could be seeing a smart move in trade today. Dharmeshji, first coming to you. Which are the sectors that you will bet big on with the GST cut to happen? I know that you mentioned that till the time the GST cuts come into play, there could be still lower sales because people would postpone their sales after the cuts. Beyond that, how would you really look at the big beneficiaries?
Sakshi, I mean, two sectors are clear plays, that is the automobiles and cement. I mean, FMCG is still, I don't think people will be consuming more. They will be consuming the way they are consuming. But these two sectors will go on. Only one thing I would like to highlight, Sakshi, here is, I mean, indirect tax collection as a percentage of GDP, if you look beyond, before 20, when the GST implementation came through, it was 5.4 to 5.6%. It has come down to 4.9% as of now. In absolute term, it does look a big growth, but as a percentage of GDP, it has been coming down in direct taxes. So just fiscal math would be definitely a challenge. Someone has to pay for this somewhere down the line. So all those things have to be looked into it, because the government of India till now has been the key spender in the pillar of the economic activity. So there are many, moving parts to it before, you can conclude out there. But definitely automobiles and cement are the two favorite go-to sectors too, in case of this implementation comes through.
Okay, let me also bring in Vaishali here. Vaishali, before we ask you on the key markets, there we're talking about the GST benefits that could accrue on autos, on consumer durables, FMCG and even cement sectors that could be direct beneficiaries of the GST rationalization which is to follow. How are you looking at these pockets? Do you think a fresh wave of buying can start to happen here?
Very good morning, Sakshi. And yes, of course, today is a positive start, and especially for consumer and automobile sector and also cement. So I'm looking at a lot of stocks like Havells, Voltas right now opening with a gap up. In fact, Havells, if you look at it, it's showing signs of reversal. So I think even the automobile sector, look at Maruti, Ashok Leyland, etc. So I think yes, it's a good rally that we are going to see from here on.
Good rally from here on. Okay, Dharmesh ji, within the auto pack, let me ask you your preference. Do you think two-wheelers or four-wheelers? What would you go with? We're given to understand across the board there could be cuts, and therefore PVs as well as two-wheelers could benefit. That could also entail higher sales, especially with already two-pronged kind of benefits have already come in. Tax cuts in the finance bill, and of course the RBI rate cuts that we have talked about. This is the third key factor that could lead to higher consumption within the auto pack. What will you choose now?
I think any company which is domestic centric, be it two-wheelers or four-wheelers or in the passenger vehicle segment, is going to benefit more from this reform. And there, the pecking order would be like Hero MotoCorp, which is entry level bike segment provider. The numbers have picked up in the month of July significantly. So 21% is year-on-year sales they posted in the growth front, followed by TBS Motor, which has been doing fairly well as far as the numbers are concerned, around 18-19% kind of a growth they have been consistently posting, and actual motors. So these three are the two-wheeler space which I am looking forward to. Purposely, I am avoiding Bajaj Auto because of its 50% exposure to exports, and they are struggling with their sales on the domestic front. So 1% was the growth out there. In four-wheeler space, I think Mahindra and Mahindra is a clear choice, no doubts about that. Being a mix of both farm equipment as well as PVs and CVs out there. And I think in this reform, because Maruti largely caters to the entry level segment or not a luxury segment, so that should also see some traction. But Maruti, to my mind, is a fairly more value. So I would prefer Mahindra, and maybe a wild card can be Tata Motors, which has been troubled with all sort of problems. So things may turn around for it with this reform.
Absolutely. Okay, let me just quickly look at the markets then, and we are going to be looking at the first tick there right now, 24,938. About a 300 point of an uptick is what we are given to understand. The markets have started 294 points higher in trade, a percent up at 24,911 at this point in time. All the sectors seem to be opening higher. Look at autos driving in, zooming ahead, 3% higher in trade, 3.2% higher. Consumer durables, 2.7% higher. The other top mover among the sectors, FMCG, 1.5% higher. Even the broader markets are opening about a percent up. At least 7 to 8 stock market indices are actually higher by over 1% in trade today, with minor gains on pharma, oil and gas, media, IT stocks. But look at the consumption-oriented space. Auto, consumer durables, FMCG, even metals and realty for that instance are up. Top movers on the Nifty. Retail space, Trent 2.7% higher, M&M from the auto pack 2.7% higher, HDFC life insurance 1.3% higher. Remember, we are also given to understand it, even insurance premiums could see GST reduction, and that could be in focus. Maruti, Bajaj Auto, three of the top movers now on the Nifty are from the auto space. Look at Hero Moto, it's driving up 8.2% higher, upwards of 5,086 odd levels, 6% higher for Maruti Suzuki India. Bajaj Auto almost 5% higher. Nestle from the FMCG space 3.5% higher. FNO space, you look at Voltas, something that even Vaishali was pointing out to, 10% higher in trade. Blue Star 9.5% higher in trade. Consumer durable spaces, all the household items that come in, electronic appliances, those are the companies that are seeing a sharp move on the index as well. Only three stocks are in the red on the Nifty, viewers, and that's Sun Pharma, HCL Tech and Larsen and Tubro. Rest all of the stocks have actually pulled up in trade. Let me also pull up for you what's happening in the broadest index there in the Nifty 500 basket. Anything else that's looking interesting here? Voltas definitely we marked out for all our viewers. You have Zaggle Prepaids, that's higher in trade. You also have names like even Most Chip Technologies, Blue Star we marked out. So those are some of the names that are higher. Quickly coming to Vaishali. Vaishali, how do you see the opening on the markets? What will you do on the Nifty?
Well, so I would say continue holding to those who are long in Nifty. Keep a trailing stop loss because we are looking at the next target of 25,100. That should act as a strong hurdle. So, from a trading perspective, one can look for this target and book partially over there.
Okay, Dharmesh ji, coming to you now. Which are the other pockets beyond autos and the FMCG space, consumer durables and cement that we've discussed that you are still bullish on, sir?
Sakshi, I'm still bullish on the defense space. So any declines out
Yes.
there, we should be buying into that. And it's a structural story. You should not be looking in a short-term kind of horizon. You should be willing to stay invested for at least 1 year or so. And the other space which I think will eventually benefit because it is the infrastructure space. So companies like Larsen and Toubro and CC, they should be looked into because eventually, even if cement prices are lower, they are going to benefit from the infra construction activity taking place. So these are the two spaces apart from what is happening right now. One should be
Very
looking into
important. Very
long,
important that
long.
Meshji you marked out because Prime Minister also did mention in his Independence Day speech that India he expects to develop Sudarshan Chakra defense system by 2035. And that's going to be bringing in again the focus on all the incumbent players that have been making a lot of defense equipments back home in India. Any top choices there that you would consistently keep accumulating over the next period of many years? You did say at least a minimum of 1 year is something that all the investors must have. But for those looking at a long term, a 5-10 year perspective, looking at what could actually come in over the next 10 years when our increased focus on defense and making in India in defense continues to be a top theme.
Actually, if you look closely in the entire defense space, it's more to do with electronics and high-tech warfare kind of a system. So any company which is into that is going to benefit from this. And to name a few, like Bharat Electronics is there, BDL is there, Astra Microsystem is there. These are the companies which are directly related to manufacturing, and they may be, contributor to Sudarshan Chakra, which may be manufactured in India going forward. And one stock which may not be directly dealing with the radar system or missile technology is Hindustan Aeronautics. So again, light combat aircrafts and helicopters is their foray, and they have been doing fairly well out there. So that is one company with all the entire Air Force system, the Rafales and all, eventually it will be manufactured in India. So it's going to benefit quite a lot from there, and it's standing on a pretty strong order book of around 6 times book to bill ratio. So these are the companies which one has to stay invested in, should be a part of your defense portfolio.
Okay, fair point. All right, Dharmeshi, we will thank you then on that note for being with us in the morning edition and helping us
Thank
with
you
all
so much,
your
Sakshi.
views. Appreciate your time with us as always. Vaishali, coming to you. What are you watching right now with this strong move on the markets and the opening? What's catching your attention?
As I said, cement stocks, so Ultratech is doing well. That is one of the stocks. And Mahindra and Mahindra, post
Yeah.
giving a breakout, it is sustaining. So I guess these are the stocks which were already showing an indication that it's going to surge high. They look positive, and I would look for these stocks.
Okay, let me, for all our viewers' benefit, read out for all the brokerage houses that are betting big post the GST announcement has actually come in. Let's start off by talking about Bernstein, which actually believes that GST on insurance premiums may come down, and that's what they are betting big on. Goldman Sachs is betting big on the consumer space. They believe that consumer products which are in the 12% slab could benefit significantly. Apparels, footwear brands, so Trent, Page Industries, Bata, Metro brands, those are some of the stocks that they are betting big on. They also believe packaged foods and beverages, so Nestle, Dabur and many other companies within the same basket. They also believe medicines and those who are into even eyewear like a Titan could also continue to benefit as well. Let me also talk about the Kotak institutional equities. That's betting big on the cement sector. Kotak says that the new rates may actually provide a 2.4 trillion rupee boost to the economy, benefiting mostly autos, consumer durables, cement sector. All those may see limited benefits given the low priced elasticity at this point in time. What has Citi said? Citi believes that GST beneficiaries would include medicines, processed foods, non-alcoholic beverages, some apparels, white goods, insurance and cement. These are the key sectors that are likely to benefit the most from GST rationalization. They also, so now Jeffries has also come out with a report. Jeffries believes GST beneficiaries will see a good chance that GST cut could come in on cement, on two-wheelers, on air conditioners. They could actually come down to 18% from the current 28%. Other potential reductions may include on insurance, hybrid cars, processed foods, garments and footwear. So similar kind of companies and stocks, and as well as the sectors that they're looking at. They're also looking at reductions on the passenger vehicles that cannot be ruled out. So cars could also see prices getting reduced going forward from here in the upcoming festival season. So watch out for that, viewers. In case you're looking to buy a car or a two-wheeler, hold on and just see what is the kind of benefit that you may see in the couple of months to follow. Morgan Stanley has come out with a report specifically on autos. They believe that autos actually fall under the 28% bracket. If they move to 18%, then there could be a sharp reduction in the prices. This could drive the next leg of the auto upcycle. There are unknowns although, but looking at the key factors, they're looking at the kind of Motherson Sumi kind of stocks. They're looking at M&M from the four-wheelers. They're also looking at many other stocks within the entire basket. Nomura has also come out with a report similarly. Goldman Sachs has also come out with, especially when we talk about the consumer products, they're talking about aerated beverages. So Varun Beverages could benefit. They're saying cars and two-wheelers, white goods could benefit. QSRs, which are currently in the 5% slab without input tax credit, could also be in focus. Footwear, they're saying in case the GST rate cut is above 1,000, then Metro Brands could be the biggest beneficiary. So some of these companies, I was talking about Nomura. Nomura has come out with the report on M&M. They have a buy call and a target price of 3,736 coming in on the same as well, on the benefits that are coming in from GST. How are you looking at some of the key sectors, stocks marked out by brokerage houses there? What else would you bet big on, Vaishali, when it comes to the GST benefits?
Well, so I would also as we spoke, Sakshi, I would also look at, see, as I mentioned, Voltas and Havels and all, they look bright, but I would also look at, technically speaking, most of the pharma stocks also have not participated. So we have, in fact, recommended Mankind Pharma because comparatively it is quite a domestic play. So that Alchem Lab, these are the stocks which I would look at from here on, which will go well with the resolutions what they are coming out with, and also technically it is in sync with that. So my picks would be these, which are having a fair value right now.
Within the F&O, I also see a lot of EMS play now picking up. Look at Amber Enterprises, 6.5–7% higher. Even PG Electroplast, that has been seeing a lot of reduction over the last 1 or 2 weeks because of the kind of cuts that the company has made to their growth guidance on revenue and profit. There was a sharp reduction on the stock. Today, it's up by about 7% in the trade as far as the F&O action is concerned. Anything within the EMS basket that you'd like to play up?
I definitely agree with PG Electroplast because that is showing signs of reversal. So risk-reward ratio also from here on is quite favorable. We have seen a good decline right from 800, from the recent high of 850 to now it made a low of 450. So I guess I would lay my bets on PG Electroplast.
Okay, got that. Let me just highlight a few more names that are picking up pace right now. We have Talbros Auto, Rico Auto Industries, IFB Industries, that's higher in trade. We've already marked out a few. Gabriel India is higher. We also have names like Ashok Leyland that's picking up pace as well. All upwards of 6–7% odd in trade. A lot of them are reacting to this entire news of GST benefit accruing. Only IT and pharma, the sectors that are not really impacted by the GST announcements, are now turning a bit weak. But look at autos, they're only driving higher, 3.7% up. That's the winning sector that we are looking at. Hero Moto 7% higher, Maruti, Ashok Leyland, TVS Motor, Bajaj Auto, M&M, Eicher, Tata Motors. Across the board, there is a very smart move coming in on the consumer durables front, we've already looked at Voltas that even Vaishali's marked out, Blue Star, PG Electroplast we've discussed, Havells she marked out as well. That's also higher by 4.5% odd in trade. Anything within the retail basket or Tata Group stocks like a Titan or a Trent, are you looking at those as well, Vaishali?
Definitely. So one of the stocks is DMart. The other one, which I'm looking at, Trent, of
Okay.
course. And once again, it's surging high. So I would say it is showing signs of higher bottom formation. So from here on, I would say keep a range of 5,300 to 5,800 levels. Absolute clarity and confirmation of an uptrend would be only about 5,800 levels. So for now, I would just take it as a trading strategy.
Okay, got that. Let me just also highlight for all our viewers what's happening on the cement basket. Shree Cement is picking up now pace. You're also looking at a lot of insurance basket names that are also higher. ICICI Lombard, ICICI Pru, that's also higher. HDFC Life we marked out. Anything from the insurance basket, Vaishali, that would catch your attention?
HDFC Life, that would be one of the stocks. And of course,
Okay.
not right now, as I'm looking at the screen, the Bajaj twins, Bajaj Finance,
Hmm.
Bajaj Finserv, they are showing some signs of revival. So these stocks are fairly placed. So besides these insurance stocks, these could be also looked into.
Okay, fair point. What about the footwear related stocks? They've been out of the vicinity for a fairly long time. How would you look at a Bata or a Metro brands? Do you think that could also be seeing some kind of benefit?
Well, too early to say, but purely on technical levels, I don't see anything happening in Bata. It's just some bounce back coming from oversold zone. So really nothing so very convincing. But let's wait it out.
Let's wait it out on the footwear basket for now, at least at this point in time right now. Within the top gainers, you see PG, Electroplast, Viewers, Blue Star, Hero, Voltas, Ashok Leyland, Maruti, Eris Life Sciences also higher, Hyundai, all of them, Whirlpool, TVS Motor. These are all the stocks that are clearly buzzing in trade. But in fact, let me also look at the stocks that could be still under pressure. Let me just look at a lot of those textile names, even chemical names for that matter, because the overhang on the tariff front still remains for these export-oriented sectors, Vaishali, because we are still at no negotiation front at this point in time. We are also given to understand that the sixth round of negotiations that were to happen between US and India on 25th of August for now at least is not happening there, but we'll have to wait it out to find out what's happening. 27th August is when we have the deadline for the 25% additional tariffs that could be put, that will take India's tariff count to 50%. Right now we are at 25%, baseline tariff as well. How are you looking at that overhang for the textile space or for the chemical names? How are you looking at PI Industries, Naveen Flooring kind of names, or textile names like a Gokal Das Export for that matter, Indocount for that matter? How are you looking at that?
Yes, so they were already showing signs of something was cooking, since quite some
Hmm.
time. If you look at Gokal Das, etc., I think they are quite well placed. But stocks like the other stocks, chemical stocks, they have already shown good momentum since the past few weeks. So I would continue to have a positive bias. So if you are talking about Naveen Fluorine, it has already done well. I would also look at SRF from here on. Then there is Thirumalai Chemicals. These are all very well placed. Archean Chemicals. In fact, we have been recommending PCBL Chemical. All these look very attractive, even from the technical eye. So, yes, my view stays positive on these.
Okay, got that. Let me just quickly just look at some of the other aspects that we can track. Financial services, as rightly pointed out by Vaishali, is picking up pace. So Bajaj Finserv and Bajaj Finance are higher. Even private banks, for that matter, some of them are actually pulling up in trade. IndusInd Bank, Bandhan, Axis, ICICI Bank, HDFC, they're higher by 1 to 2.5% odd. Anything within the private banks that you like?
So ICICI has always been the favorite. So that is one of the stocks which has always had its strong uptrend. So that is one of the stocks. But along with that, not to miss HDFC Bank. And I would also focus now on Federal Bank, and those are the stocks which should give a rally from here on. So let's see. Once we see a momentum, I would focus on these stocks.
Okay, got that. Let me just quickly look at Any other key sectors that we can mark out? Real estate, let's look at that one. Vaishali, we haven't discussed that for a long time. The likes that we used to discuss, Godrej Properties is also buoyant today, 1.7% higher. Prestige, Lodha, DLF, Anantraj, Phoenix Mills, these are the stocks that are higher in trade. Anything within the real estate basket, even though it's not getting directly impacted because of these newer reforms or rationalization on GST, anything?
I would right now I'm looking at the realty index itself. So if it has to show clarity, I think there is a bottom formation of the index itself at 880 levels, and currently it's at 891. So as long as 880, 850 levels are held on as support, this can show a good bounce coming towards 950 for now. So according to that, I would look at DLF Godrej Properties. But for now, it would be just a trading strategy, and there we see Godrej Properties coming in momentum. So I would take it as a trading bet.
Okay, fair point. Let me just look at just the pure play FMCG names now. We have discussed quite a bit about the consumer durables names, but pure play FMCG with the everyday household items also getting reduced. Dharmesh is of the view that people, of course, see the pinch when the prices are higher, but what is of essential usage never goes out of your bucket list of your purchases, and also people don't start to consume over and above than what they need in the FMCG space. So he does not expect like a huge benefit coming in, but your sense of how would you look at the pure play FMCG products from say Nestle, Dabur, all of these companies, how would you look at them?
Yes, actually, of course, so it has to be in sync with the market. I mean, well, some of the sectors outperform, some of the sectors they don't perform as much, but well, they have to be in sync. So I would say, yes, they are getting in a trend, and especially HUL today, what we are seeing is trying to make a higher bottom. So I guess this will be one of the stocks. Along with that, even Dabur is showing a good a bullish candle. So these are the stocks which can give a bounce back. But for a longer term, I'm not too sure. I would just say maybe a gain of 5 to 6% from here on.
Okay, got that. Let me just quickly also look at some of the other. So right now we have Dabur, which is up by almost 5%, Nestle that's up by almost 5%, HUL, Britannia, Tata Consumer Products, all of them are definitely buoyant in trade. But you've heard the views there that have been shared by Vaishali on the same as well. Let me just also pull up. Okay, so within the cement basket, also Vaishali, you did give us a pecking order from the large caps. Anything within the mid caps as well within the cement basket that you like?
Well, I saw some time back Grasim, which was showing some strength. India Cement was showing strength. So these are the stocks. Let's catch the
Yeah.
momentum. I would look at it that way.
Fair point. Commodities play today, metals are higher, but oil and gas is still seeing some cut at this point in time. Anything here that you'd like to mark out for our metal, enthusiasts out there who keep on watching this space very closely? 1% higher for the metals index today.
So metals on the whole, you see JSW Steel, Jindal Stainless, they all are continuing with its uptrend. So yes, Vedanta would be a good buy from here on, technically speaking. So also would be the case with SAIL. So these are the stocks which can get into new round of momentum. So I would look at these stocks.
Okay, fair point. I hope this is also, garnered attention there. Let me just look at the mid and small caps now to see what's happening within the broader markets. Remember, the broader markets have been very, very shaky of late over the last couple of weeks. Today, mid caps are up by about 1%, of course, buoyant by the overall move in the markets and led by, of course, this GST news. Anything within the broader markets that take your attention?
Not really right now. Nifty is being pulled by Reliance, Mahindra and Mahindra. So it's the front line which is taking the focus right now. So I would wait and watch.
Okay, fair point. Let me just bring up for all our viewers to see what's happening on the earnings front. Remember, we are absolutely at the faggest end and we are looking at very, far and few between companies that will just keep on coming out with the results now. Let's start off with some names and we'll take a view from Vaishali there. I wanted to talk about Vodafone Idea. That's something that a lot of retail investors continue to track. Now, the telecom operators net loss widened to 6,608 odd crore rupees, and we did did see the revenues from operations stood at 11,022 odd crore rupees there a year ago period, from the year ago period. So that's an uptick from 10,500 crore rupees from the year ago period. But you see the stock higher by about 3.5% post the kind of earnings that have come in. Any sign of recovery taking place on Vodafone Idea, or should one still stay away from this one?
I think to recommend this is like inviting trouble. So many times we have seen stock showing signs of hope, but well, it fails. So, well, to those who still would want to keep 580 as a stop loss, and if we are lucky, we can see a bounce coming towards 7.
Okay, got that. Let me just read out a few more names that have come out with the earnings. Inox Wind is in focus today. The company's profit came in at 97.3 crores. That's against a profit of 41.6 crores seen in the comparative period. Revenues have come in at 826 odd crore rupees, again higher from the 639 odd crore rupees that were reported in the previous year same quarter. So that's also ticking higher by 1.5%. Swan Energy, here the company's profits came at 27 odd crore rupees. So that's seen a sharp dip there, so keep an eye out on that one vis-a-vis the previous numbers that had come in, and therefore you actually see a 2% drop on the stock price as well. Let me also look at even from the pharma space that we have, Glenmark Pharmaceuticals. This company has reported a steep 86% year-on-year drop in the consolidated net profit at 46.8 crores for Q1. Against 340 crore rupees that was reported in the same quarter last year. However, on a sequential basis, the profit has actually gone up from 4.6 odd crore rupees substantially as well. But the problems continue to tick. I just wanted to highlight some of these earnings that were coming in. Anything that you'd like to share a view on within the names that I took?
No, not really.
Inox Wind, Swan Energy, Glenmark.
Well, Glenmark is showing strength, and I would say that continue holding to those who are, and those who wish to buy, one should wait for a dip because we've already seen a good rally. So I guess right now it is at a good support, but if it still corrects, 1900 acts as a very good support. And the way the formation is, I think in all likelihood this can retest 2300 to 2400 in times to come. So according to me, Glenmark Pharma is very strong. In fact, even now, in fact, if you ask me, Sakshi, there is good momentum coming in HDFC, AMC, also Poonawalla. So these are the stocks which I would look at now.
Okay, fair point. I hope we'll continue to look at all of these stocks as well. Let me look at now again the banking space, which largely we've already focused on the financial services and the large cap private sector banks. PSU banks that started to tick, Vaishali, last week onwards. Do you think they still hold the strength to continue their momentum?
I would say so, yes, because it's a matter of time. They have to participate, and I see no reason as to why not. So I would focus on SBI, also Union Bank. Indian Bank already did very well in the cash counter, Maharashtra Bank. So these are all good positional buy strategies, not in a runaway. I mean, I won't expect a runaway rally from here, but as I said, it's technically very well placed. So one can focus on these for a positional trade.
Where you can actually see a runaway trade happen is completely in the auto basket at this point in time. Over a 4.3% uptick now. You are actually seeing the auto index now tick at the highest point of the day within the first 25 minutes of trade. That's where, the maximum enthusiasm is after the GST rationalization news has come in. Look at Hero Moto, 5105, 8.4% high in trade. Vaishali, we were already looking at Hero Moto emerging as among the top consensus buys from the two-wheeler basket for a lot of fundamental and technical experts, and that was on the back of the sales that was also improving for the company and how the technical structure was vis-a-vis the other two-wheeler makers. At 5104, would you still go and back this kind of move that we are seeing on Hero Moto, or would you look at alternatives like a Bajaj or a TVS?
I would say actually, Sakshi, we have, in fact, on your channel, we had recommended Hero Moto right from 4200 levels.
Yes.
And right now we are at 5100. So, well, it's a risky trade. I would wait for this stock to have a dip, say around 4800 would be an ideal level. But I would definitely now focus on Bajaj because that is not participated, technically very well placed. So Bajaj, if I were to buy fresh, it would be Bajaj Auto.
Okay, got that. Okay, let me just also pull up a few more names on the Nifty that we are getting to see smartly move up in trade beyond the ones that we are seeing at this point in time. Well, most of them are actually from the auto space, the cement space, FMCG, and the financial services space, in even the insurance basket that we see. Adani Group stocks. Let me just focus on that a tad bit. The momentum that was garnered last week. Do you think Adani Group stocks will continue to have that built in, or do you think there is still a long way for a stable, sustained move on the upside that you see here?
Of all the stocks in Adani, my focus, of course, is on Adani Ports. So this too is at a very good level because it had already got in a trend. We saw a good retracement, and now currently back on a support of 200-day moving average of 1250. So this would make it an attractive buy to look for a next target of 1550 to 1600. So this is one of the stocks, and the other stock that would be good and which I am focusing on is Adani Power. So these two stocks, I would say, please hold or buy with a strategic move.
Okay, fair point. I hope this has also given you some sense as far as how to look at some of the names there in the market. So, viewers, Sensex has soared by over 1100 points. Bulls are taking back charge. Look at even the Nifty, 362 points higher, 24,995 right now. Ticking in closer to that 25,000 mark as well, 1.5% higher. So, very strong move. After the GST reforms announcement has actually come in. A GST bonanza that could brighten up Diwali, and of course Diwali coming in early on the street as well. Vaishali, if 25,000 sustainably is with us, where do you see the markets going, and do you actually say that bottom is fairly in place now?
Yes, of course. We saw that, this was showing some signs of clarity because in spite of all the adverse news that we were going through and all, market held on to the 24,000 levels. So that was good enough thoughts that yes, we are stable. So now to further have a convinced strategy, I would say 24, our support levels would be elevated now to 24,400. We need to sustain about 25,200 to look for the next target of 26,000 and perhaps higher. I would go step by step. I would not get into the euphoria, but the signs, the indication is quite positive. We are heading for good times.
We are headed for good times ahead. That's music to the ears. First half an hour of the candle is out now. Vaishali, on the Nifty and the Nifty Bank, 25,000 right on the first half an hour tick right now, and higher than that. How would you play between the two indices?
Well, so yes, as I said, my weekly target for Nifty is 25,100, 25,200. I would patiently hold for that level. And as far as Bank Nifty is concerned, we have the major weightage coming from the banking stock. So this has to participate. I would look at 56,500, 57,000 from here on. But I would also focus on few of, Sakshi, we have always focused on, stocks which are overlooked like KPIT technology, etc. These stocks are once again at a very good level. So besides the major index, I think IT also should buck up.
IT also should buck up. Any place where you are still cautious on, Vaishali? Which pocket or sector would you say that might not participate in this recovery rally immediately? It will take some time. So therefore, investors have this clarity in mind that when one is looking at this recovery trend and betting big on the markets now on, should there be a clear view that, okay, some of the sectors are not to be touched?
Well, I would say it is more of a stock specific scenario because not necessarily that, it has to be an index view. But oil is still not giving me any clarity. So today Reliance has started participating. So let's see. We need to focus on oil.
Okay, got that. So within that basket, would upstream or downstream, what would take your attention?
So I would say right now it's a good chance to start accumulating Reliance, but I'm not too sure about the other stocks, ONGC, oil. They are not showing me clear indication.
Okay, Reliance Industries. What's the next target, Vaishali, that you'd like to draw here? 1394. Do you think the previous 1500 and upwards kind of targets can be retested and we could see higher highs?
Well, I would like to believe that, because if I'm saying that market is heading for a good time, Reliance being the master of the game, it has to participate.
Okay, fantastic. All right, Vaishali, we'll thank you then on that note for being with us and helping us navigate through these fresh, strong moves on the markets and where to keep our attention and where not to get trapped as of now in this smart bounce in the markets. Always a pleasure to host you with us. Thank you so much. Keep a watch on the markets. We'll get you very soon.
Thank you.
25,012. That's the level at which the Nifty is trading at. 381 points strong in trade, day's high point. Strong volumes being seen at this point in time. Which are the top contributors to this very smart rally in trade? Well, of course, you all know that it is clearly the GST reforms and the news flow that came in over the weekend that has led to this smart bounce to come in. GST 2.0 is seeming to be the clear place where is kind of offsetting the impact of the tariff tantrum and the kind of losses that we were seeing on that front. Auto index is clearly the top moving sectoral index that's driving from the front row. You can see 4.4% higher now coming in on the kind of move that we are seeing on the auto space. It is Hero MotoCorp, that's the top moving stock on the Nifty here, 8.4% higher. Maruti follows with a 7% uptick coming in at 13,871. You have Bajaj Finance that's up by about 6%. Remember, when people go ahead and buy those cars, two-wheelers, once the GST is cut, how will they finance it? It is via companies like Bajaj Finance. Look at it from that aspect, and that's why how Bajaj Finance is also ticking higher. Look at consumer durables and look at the FMCG names. Consumer durables index is also up by about 3%, 3.3% right now. So names like Blue Star, Voltas, Amber Enterprises, these are the ones that are actually taking higher on the back of that, because when they will be seeing some cuts on the home appliances, people who've been still so far thinking of these purchases might go ahead and buy that once the GST rates are reduced. Real estate space also taking higher in this space as well, 2% up. Financial services up by 1.8%. Metals are higher. Private banks are up. FMCG 1.5% higher. So names like even Nestle, Dabur are also taking up in trade as well. Cement space stocks, clearly there is a benefit accruing there. Remember, so far in the last 1.5 years, you have seen cement prices continue to tick higher. If the GST rates are reduced there could be a climb down on the prices there too. So Ultratech Cement is clearly up in trade right now. Broader markets taking higher. All the sectors have now yet again moved into the higher zone towards the end of the first half an hour, 35 minutes odd in trade. So it's a brilliant opening for the markets after 3 to 4 trading sessions of very, very volatile moves that we saw on the back of the tariff news front that came in. It's the domestic news, something that could not be done by the earnings front. GST reform could actually bring in that fresh wave of consumption that everybody has been waiting for the needle to move on as well. So we'll continue to get you these fascinating insights, deep research insights as to which are the pockets that are likely to benefit the most from the upcoming GST rationalization throughout the course of the day. So stay tuned with us for understanding various perspectives from different market experts who will be joining in through the course of the day. Thank you so much for joining in. Stay tuned. There'll be many more market conversations going forward from here. 12 noon, we will answer all your stock related queries. So join in on daily calls for that. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and here's wishing all the viewers of Business Today Television